Well, let's focus on one of the stocks of Friday, Shriram Finance. The stock street was impressed with the numbers that they delivered in the first quarter. To understand what went on in the past quarter, what's the way ahead, we have Mr. Umesh Revankar, the Executive Vice Chairman of Shriram Finance, who joins us on the show. Hi, Mr. Revankar. Good morning and congratulations on a good set in the past quarter. But the street believes you're being very cautious with this mid-teen, 15% AUM growth guidance that you're giving. First quarter itself, you did much better than that, and most are penciling in a number of around 18-19%. Do you think that is in all probability gettable? And also the other positive is now the street believes that there's a lot of cross-selling opportunities. So your non-auto segment will grow as well. How do you see that shaping up?
Yeah, good morning. Yes, we were a little cautious because of election, 2 months of election, and normally during the election, the government machineries don't function fully. And many of the business activities, especially road transport and infrastructure, to some extent dependent on the government departments functioning. Therefore, we were a little cautious. But luckily for us, I should say, the entire election process was very smooth and it did not disturb. And it was also well spread. It never concentrated on any particular state for a very long time. That helped the entire economic activities to carry on without any kind of a disturbance. So the growth was normal for us in the sense, continuing with the last year's 20% AUM growth, we were able to grow, and the credit demand was quite good from the urban and rural. At the same time, as you rightly said it, the other benefits which is accruing out of the merger, that is happening. Especially MSME, we are able to grow much faster, and we are able to add more branches for MSME lending activity. We have been very calibrated. We have been growing steadily on MSME because each of these geographies we need to understand, study, and grow the business. That's what we have been doing.
Mr. Revankar, but good morning, Prashant here. So Q1 was expected to be a little weaker. It's turned out to be stronger. I think you said in the call Q2 and H2 will be stronger than Q1. So would you want to take up your? The street is already penciling in 20%. Why not take it to 20%, sir?
See, H2 will be always better than H1. The Q2 will be a little unpredictable because of the monsoon impact. Even though excessive monsoon is there across the south, that is very good. And we are also witnessing same in coastal Maharashtra. These are all very good signs. But sometimes it can have some disruption, temporary disruption. The clear picture will emerge only towards the beginning of September for the Q2. But H2, when the monsoon is good, the H2 will be very, very comfortable. So I think the H2, we are very confident. On Q2, we'll be a little cautious, but still, as the opening, once the opening months are good, automatically things will roll out better in the subsequent month. We should be able to grow well for the rest of the financial year.
So, sir, can you give us a target? Your AUM growth is at 21%. What kind of growth are you looking at as we move into the end of FY25? Any targets that you have?
See, normally, we don't put target on AUM growth. So what we do is we have a certain growth target depending upon which geography to grow and which are the product or segment to focus on. So we make it quarterly, and product mix is very important because certain product mix which we'd like to grow faster, there we would like to focus more, especially on the Q2 or this part. The rest of the financial year, we would like to grow the gold loan portfolio because we feel that there's a good opportunity for us to grow that business. We'll be pushing for MSME growth further in new geographies. These are the targets, and the AUM, what comes out is overall, no, the growth numbers. So the idea is to improve or focus on bottom line. Bottom line is more important, and asset qualities are more important. These are the two we have a targets to focus on. And on asset quality, we have improved 6 basis point Q on Q from 5.45 to 5.39. We would like to inch towards 5% by the end of the financial year. And as far as the credit cost is concerned, it is 1.89 compared to 1.97 last full financial year. So we would like to focus on these parameters rather than the overall growth. Growth will come depending upon the economic activity.
So gross NPAs, you said, will come down to around 5%, right? That's the goal.
Yes, yes.
And you're maintaining your AUM growth of close to around 15%, and you believe that NIMs will hover around these levels. Is that correct?
No, see, as you have seen faster growth in the first quarter,
yes,
the AUM growth will be a little more than 15. Definitely, it will be a little higher. But see, that's not the target for us. So I would like to say that focus will be more on asset quality and the credit cost.
Okay, and credit
and of course,
cost.
Net interest margin.
Lovely. So net interest margins, Mr. Revankar, what should it hold at? If you could give us a number. Because of that product mix that you're talking about, the yields came down a little bit in the first quarter. So how do you see this pan out going ahead, the guidance on the NIMs? And credit cost, for the next couple of years, it should hover around this 2% mark?
Yeah, see, basically, as far as the net interest margin, if you compare Q on Q, there is a big improvement from 8.33 to 8.79. In the first quarter, especially what happens is the March month, normally we have higher focus or higher demand for new vehicle. And since the new vehicle lending is high in the February, March of the previous financial year, that gets impacted on the numbers of the Q1. And also, to some extent, the gold and the personal loan, there was some moderation in the growth because we are reworking on the strategy in the gold and personal loan. Because of some moderation was there, and because of that, the net interest margin was little lesser than the Q4. But if you compare with the Q1 last year, because this March new vehicle lending is year-on-year phenomena, then there is a substantial improvement from 8.33 to 8.79. So I feel the net interest margin will hover around this number, 8.8 to around 8.9. That range it will hover around. As far as the credit cost is concerned, yes, we would like to keep it less than 2 at any point of time. Last year, for the full financial year, it was 1.97. We would like to improve a little more on the same.
Okay, all right. Got that. We had a few other questions, but we leave it there for now. Appreciate you joining in with all of that perspective, Mr. Revankar. So more than 15%, but you're not putting a number to it. That's not the focus. Focus is on NIMs and credit costs, as you said, on the bottom line front. Thank you very much for being with us here on the program.